name is Alejandro Zambrano, the Global Chief Market Strategist with ATFX, based in London. Sorry to keep you guys waiting, and sorry as well, we're having some issues here with the chat box on investingcube.com, but it's very easy. Just click on that link there, and that takes you to this page here, and you can say something if you want to, like a good morning. Wouldn't mind that. As well, don't forget to check out the site afterwards. If you just scroll down here, you can actually see some of the updates that Nicholas has already written. I'm going to, well, I produce updates as well, and if you scroll down enough, you'll see them. So yeah, stick around on the homepage as well. As you know, there's a lot of content here. Now, some of the stuff is actually locked. It's locked. Let me see if I can show you. But it doesn't actually mean that it costs anything. You just need to register, like this one here. You register because this is a free membership only. In fact, we only have the free membership. So just register, and that is sign up here. First name, last name, email, and then click here, and then it continues to another little page, and then you remember. And you can access all of my stuff and all of Nicholas' stuff as well. Because yesterday I got a question about the Aussie dollar, and here it is. You just need to register. So you can read this one, register once, and you access all the premium content. Okay, let's move along here, and let's talk about the euro versus the USD. So the euro versus the USD unfortunately dropped below this level down here, which is that trend defining. Actually, I had it slightly higher, which is this level down here. And you know, there's not too much to do about this, fortunately. I think it can obviously go up a little bit, but I think eventually maybe 1250, maybe 1234, and then maybe from lower levels try to stage another push to the upside. I think what's happening here though, like the biggest issue, well, not biggest issue, it's just that we're trading sideways here. And as you might remember, some weeks ago we were looking at this as a wedge. We had that false move, and now it looks like you have another false move, because if you, we were looking at it like this, I think, yes. So this was one false move because it went back into the wedge, and then if you put it like that, you can see we're back into the wedge again here. So I think this sort of shows the problem of trading wedges or trading anything with trend lines. Rather just sort of focus on horizontal support and resistance. And if we look at this from this perspective, you know, again, as I've been saying before, both the Fed and the ECB are anticipated cut rates. So, you know, this is a battle here. It might go up now because the Fed cuts rates, but then a few months from now, it might go back down again. As people sort of start to realize that the ECB is also going to cut. If they haven't done so already. I mean, I already seen through it. So I'm not sure why everyone else doesn't do that. But looking at the price action, it actually does look like we're starting to see some people pricing that in. Which in essence, this thing is going nowhere anytime soon. Here's the GBP versus the USD. So it's trading slightly lower today. So as you might remember, the price was within this range for about 7 days. 26.44 was that trend defining level. It's going a little bit lower. It might just create what will be like a deeper right shoulder. If it will move down to the same levels as we've seen here, then has quite a bit more to go. I don't have any strong view here, but we are moving down, so I think we can go down a little bit after trending sideways. My preference here is just to wait for either that head and shoulders break, alternatively within that big range. So break to the downside could take price much lower, which I think makes sense, because most likely Boris Johnson or even Jeremy Hunt is going to be the next prime minister, and both are sort of getting ready for no deal Brexit, which would sink the pound, I would think. It's because people don't like uncertainty, and I mean, just getting this divorce bill through is being a problem. So you can imagine they still need to negotiate about what's going to happen in the future. Number two, I mean, the average trade deals takes about 7 years to do. I know the Americans has promised to do a trade deal with the UK and do that very quickly, but it's always give and take, guys. There's always going to be some sort of issues, either by not just with the Americans but with anyone. It's going to be standards, for example. They're going to be different. You know, should we allow which sort of food, you know, should it be all sort of using certain steroids, medicines and things like that, for example. In the case of this new deal with Mercosur, which is, I think, well, it is, what's it, Brazil, Argentina, Paraguay, and Uruguay, I think, and some of these countries on the east of South America. I mean, that deal took 20 years to develop between the EU, which is the world's, if it was a country, the EU would be the world's biggest country, and then these countries in South America. And obviously, there's always a trade-off. So yes, the Germans can sell more of their cars, but at the same time, a lot of beef from something from, say, Brazil and Argentina is now welcome to the EU. So there's always going to be issues back and forward, and it's always give and take. So the question is, what we want to keep. There's always that issue that we don't really know exactly what we're going to be allowed to keep or not. So we'll see what happens. If they manage it good, it can be really, really good. Who knows? Maybe they strike something. Maybe they'll make the UK some sort of a tax haven. That wouldn't surprise me at all if taxes go down quite a bit, which is good if you're running a business. If you're not running a business, then it's not that easy, I would say. It's less tax income, less sort of NHS and so on and so on. But we'll see. We'll see what happens. But I think everybody can say that it's probably going to take a bit of time. And that is what the market cares about. So again, even though, as I said before, short-term gain for potentially long-term gain. We'll see what happens, But I can tell you short-term gain pain is probably the most likely scenario, with a break to 24.78, probably taking down lower. So we can go down to the March 27 low, and then maybe down to 18.15, 84. So that's sort of, I think, the more obvious trade setup. As for the dollar yen, it's going down a bit, and this is not unsurprising at all, because on the daily, the market is sort of still capped by this. And it's so headline driven, this market. So for a few days, everybody gets so excited and just buy yens. And then 2 days later, or 1 day later, really, here, the market's going down a bit. And technically here, this is still capped by this level. And I think we will go down eventually. The ISM indicator yesterday for the US dropped to 51. Very clever people estimate that's going to go below 50 next month, which again would say that the manufacturing sector in the United States of America is contracting, which is nothing weird. It's happening in Europe, it's happening in the UK, it's happening in China, happening in many parts of the world, and we're heading to some sort of contraction or some sort of recession, contraction, at least in the manufacturing sector, which tend to lead to a recession as well. So, but not always. So let's see what happens. But again, I think the yen is going to strengthen more this year. That's what I think. And we'll just have to see what happens now. Trading wise, if you want to, you can short sell here, target the lows. But my preference remains just to be bullish gold. And I know gold slipped a lot, and it's very fragile, and it could easily be stopped out, especially on Friday if the NFP is so very good. But for now, it's holding up well, and my suspicion has always been that we're going to trade within this range. I first said that the market could bottom out at 1404, which it did, went upwards, but then because of those news, we traded lower, but never did we trade below that trend defining level, which was at 1375. And I'll stick with this one, and we'll see what happens, because no one really knows. Like, trending wise, it's sort of a terrible year for trends. Maybe the market's going to have a bigger correction. So I'm just taking fibs here from the April 9, 2019 low, and you have first fib, 50 fib, and third fib here. So we might revisit all the way down to 1338, but then maybe rebuild from here. But I think in the longer run, I think this gold trend is here to stay for now. And if you're focusing on the short term as I am, then 1375 is that key. And if this doesn't hold again, we'll go a little bit lower. But then I think down here, the market's going to try to create a base. As for crude oil prices, they're slightly lower today. So on Friday, I said if we go down, people are going to buy. The market moved up to target. And now today, I have actually reduced the trend defining level to 57.27, so slightly less risk. Up here would have been a good idea to book 50% of positions. I think if we revisit the lows, I think people are going to buy. In fact, I don't even think we're going to trade as low. So if we just visit something like this level here, which is 58.62, I think that might be enough for people to maybe do something like that. And I think we can do now, let's just reduce the trend defining level to just below this low here. So this original position is pretty much a break even, more or less. and then we'll see what happens over the next few days. S&P, well, nice little breakout, almost. Didn't really manage to trade much upwards. If we take out something like yesterday's high, I think that would help to confirm that breakout. But you need to be careful. You got the the NFP coming up on Friday. That could easily sort of knock price lower again. And that's sort of my main theme. But at the same time, this market is bullish. Some of the European stock markets are bullish. Even the Chinese stock markets are short-term bullish. So clearly, the market somehow knows something that maybe I don't know. It's very easy sometimes to get very clever and sort of, we look at the ISM indicator, we look at the NFPs, and then you have people that look at even stuff, longer term stuff, that sort of try to predict what's going to happen in the future. But the thing is that, you know, people have hope, and if you have a trend, people will stick with the trend until very late. In the case of hope, you know, even if some of the data is bad, they're not going to give up immediately. And then the other thing is that, you know, not everybody's looking at the indicator that you're looking at. So some of the stuff that some of the big economists do, you know, the different banks, you know, they take interest rates, they look at the annual change and combine it with something else and back and forward, different indicators. You know, they're also hits and miss a bit like technical analysis, right? And some people that have been bearish for a very, very long time, for 1.5 years. You know, I remember, I think they got it right about here, but then from a trading perspective, the market went all the way up, and then the market obviously started to move lower, and these guys started to sort of rub their hands because they thought, okay, now this is it. But then the markets went all the way up, and now we're pretty much back up here. So if you have that very long-term macro view, then, you know, you will miss out on, you know, 15% rallies, and sometimes you'll grab one of those 20% declines, but you also miss out on 27% moves. So for us that are actually trading the markets, those macro news, macro reports are interesting, but not very interesting from a short-term perspective. So even though the data could be bad, you know, if we have decent numbers on Friday and the market starts to move upwards, then I think we're gonna probably continue to move upwards for a bit. Not necessarily saying we're gonna go to, you know, 2162, but we can definitely go up maybe to 3,100, maybe 3,200, which will still be a very decent move. Will be about a 7% move, and with a bit of leverage, you know, it's not so difficult to see how far this could go account-wise. So we need to be very open-minded. I have sometimes been close-minded, but at the end of the day, the charts are many times king, because you can look at the S&P, you can look at something like copper, like is copper moving slightly lower or upwards? Well, copper is still in what looks to be like a massive head and shoulders. So yeah, okay, if we trade below maybe these levels down here, it's going to be bearish, and at the same time, you know, you have that disconnect. But it's not always like that, actually. It's not always like that. I remember here summertime, and I shorted for about 2 weeks at this section here, so the whole market declined until September. But if I remember correctly, in June, the market was going upwards. So it's not even always, not even correlation sometimes hold very well. So we just need to trade the markets, I think, independently many times. Obviously, take a look at the big picture, but there's no clear-cut cases. And I can tell you that this has been trading for a very long time, and a break to the upside would be a significant event. A lot of people, because the same people that were bearish as well many years ago, the same people are constantly bearish. If I show you the S&P 400, see if I can show you the actual index. So this is some stuff I did years ago. So here, between the year 2000 and 2013, the market was trading sideways. And I remember speaking with some clients. I said, look here, the break to the upside here is gonna generate a significant rally. And look, we did. You know, as long as the world economy is going in the right direction, as long as people are trading more with each other, making more money, then we're going to go upwards. Obviously, now we're not in that real situation. There's more trade wars. People are looking to sort of put up barriers. And if the ultimate purpose, which I think is also what it is, so Donald Trump's ultimate purpose is not to have tariffs. He just wants to have fair trade, you know, like fair business. So from that perspective, if he actually manages to get a really good, really nice deal with China, then obviously the market can go much higher. Because as I said before, if an American company doesn't have to have a partner in China like they have to do today many times, then they might be welcome. They might do production of things over there that they're doing in other places right now. So, you know, costs can be cheaper, and these companies make more money, and the S&P 500 goes higher. So it can be good if we get a deal. If not, it's just going to be pain. And at the end of the day, though, big, massive sideways pattern here, eventually traded to the upside. Here as well, a massive move, massive trading sideways, and I think Donald Trump, I don't remember, November he got elected. So about here, I think, I guess, the market moved upwards. So again, sideways pattern. And again, we're dealing with some funny looking head and shoulders, which again could potentially sort of lead to much higher prices. So we need to be open-minded. The market will move upwards on what we call a wall of worry. So the market is always worried on the way up. And then when everybody's happy, when people that don't necessarily get involved in the markets get involved, then that's when you have that massive move to the downside. A very good example of this is actually Bitcoin. So Bitcoin, you know, moved significantly higher, and here just a week or two ago, you know, people were saying forget about the all-time high at 19,700 or so. They said look for 100,000. Well, gosh, I would love if they would have said this down here, but everybody was quiet down here. The market started to go up to the upside, and then up here, when the market already rallied significantly, that's when people start to say, oh yeah, look for 100k. And obviously we have a little bit of a setback. Might go a little bit lower here in Bitcoin. I suspect that we could bottom out here by the way this looks like. We need to give it more time. Maybe we'll go down to like something like 9,000, 8,550, but clearly here we're dealing with an uptrend above 7,435. So somewhere down here, I think people will look to get involved. But obviously right now it's just trading lower, so you need to pay attention, maybe look for a bullish pattern here. And the same analogy, euphoria and things like that and worrying is something that tends to make a lot of sense with the markets. The markets are worried, but S&P is where it is, right? So clearly, you know, it's just doing what it always does. Maybe shouldn't be too worried. This is the German DAX. So German DAX, here's the last buy level we said, and the market is clearly up here. So, you know, if you didn't book half of it, I would do that. And I think if we go down to something like 12,411, I think people are gonna buy. And I have now reduced the trend funding level to 12,258. So that's my new level. Might pull back a bit, but then I think we're gonna go upwards. Okay, no questions here, so I think we're gonna wrap things up. Guys, you're very good to joining me here. We're having a very good amount of subscribers of the ATFX channel, which is great. I mean, we just launched this like 2 months ago. And I really want to thank you so much for your support. And you can continue to support by just clicking on that like button, because that's gonna spread the word for other people. And again, you know, if you like the stuff I'm doing, if you like the stuff what Nicholas is doing, then you know, follow us here. The idea is to potentially add a third person to help produce content. So we'll have content from pretty much early morning, 7 a.m. London time, until about 5 p.m. London time. And the idea is to, you know, give you a bit of an edge. You know, some websites are really, really fast. They give you the news, but they don't necessarily tell you, you know, which levels are relevant. And then you have some other guys that just produce content where they really, but the guys there, they don't trade. Like Nicholas has been trading. He's old and much older than me, and he's been trading, I think, for 20 years or something like that. He's been in the industry for about 20 years as a minimum, if not more. So you can gain a lot by watching what he says. I've been trading since 2006, and hopefully we can get some other guy coming in. And the idea is to, provide some more bit of information that you won't necessarily find. Again, not going to be the fastest one, but we hopefully can give you the core news plus the technicals to make sense of it. And it's again a very straightforward. You just sign in. You can read stuff. Again, this is the way. Some of them are going to be locked, like this one. You click on register, and then when you log in, you're a member, and you're going to be able to join our different things. As well, we have some educational webinars here. So if you want to learn more, actually here, yes, we have actually webinars, and we have also trading videos. So you can check them out. Some stuff is in German, some stuff is in English. So check it out, even Spanish as well. Okay, guys, thanks so much for watching, and I'll see you guys on tomorrow, same time here at investingcube.com. Thanks so much, and see you guys around. Bye bye.